Hey guys, it's Eddie Deline here. In this video today, I want to go through and outline some very important information about when you are buying an investment property. Now, you'd have this video coming your way via email if you are buying an investment property right now, so congratulations if you are. But before you move on to the finance side of it and actually continue to purchase this property, I wanted to drop you this quick video to talk about valuations. And basically to answer some very common questions that I get asked all the time about valuations of when you're actually buying a property. So one of which is they're using their own broker, and sometimes their own broker won't elaborate on this. But if, let's say, you're buying property, it's 50,000 under what other ones are going for. 50,000 under the market, comparables under what other ones are actually selling for. A common question, what happens a lot of time is the actual buyer or the person purchasing it will be very interested to find out what the actual bank valued that property at, because at the time of purchase the bank must value the property to ensure that you are not overpaying and that it's worth minimum the amount of the loan in pro rata loan to value ratio that they're actually giving you for the property. So if you're buying a property for 300,000 as an example and you're doing a 90% loan, they want to make sure the property is worth 300,000. They're actually giving you a loan at 90% against that property for 300,000. So even in the past, when I've personally bought properties and bought hundreds and thousands of properties over the years for myself, for clients that are 50,000, 100,000 underneath what other banks have already valued it at, or underneath what other properties are selling for, at the time of purchase, if you right now are going through, let's say, a bank called Commonwealth Bank or NAB or St. George, the bank will do their own valuation of that particular property, and they will always, literally 99.9% of the time, I'd say 100% of the time, they must value the property of what you're buying right now to whatever is on the actual contract to sale. So if you're paying $350 for a property and it's worth $400, other ones are selling for $400, and you'd be like, well, other ones are selling for $400, why are you valuing mine at $350? It's because of banks' internal policies. And what happens is, they'll do different valuations many times, but the main reason behind this is because it throws out your loan to value ratio, LVR. It throws out your LVR. So imagine for a second, you're buying a property for 300,000 and it's worth 350. If you're doing a 90% loan on that, as an example, of that property, if they valued at 50,000 more than whatever is actually on the contract to sale price, well, that essentially means you're paying 300, the bank's valued at 350, and you're doing a 90% loan of whatever the value is. That means then 350 minus 10% of not, which is 90, would be $315,000. Would essentially mean that they're paying you the difference to buy the property, and banks will not pay you, unfortunately, I wish, to buy properties. So they always must revert the property at the time of sale, the price, the value, to whatever is actually listed on the contract to sale within reason. So when I bought property, sometimes I knew they were worth around 500,000 in that vicinity, in that range, and I picked them up for 380. They still valued them at 380 at the time of sale on the contract, because that's what was actually on the contract. So whatever's on the contract, literally 100% of the time, almost, they're going to revert it to that, regardless, irrespective of whatever price that you pay for that property. So bear in mind, if your broker said, hey, it's come back at contract price, don't freak out. That's number one. Do not freak out. Don't think that you're not buying a really good property. Don't think that it's not under market value. Don't think that there's an issue or anything like that, because talk to brokers. You can even chat to the brokers we have here, chat to any other broker. If they can be bothered, they'll take the time to explain it like I am today. But banks always must value it at the contract price, so they'll adjust it accordingly. So it must line up. Only in future, when you go back and order that revaluation, it comes back at a higher price. So you've got different types of valuation. So you could go back in 1 month, 2 months, 3 months, 6 months, or 12 months, whatever it may be. Order a desktop, give us a call, chat to the brokers, Justin or Steve or any part of the finance team, and we can order the desktop valuation on the property, and that's where you'll find the difference of what we've spoken about, where you have the valuations come in 50,000, 70,000 higher, and then you can refinance it, restructure the loan, take out the equity, and use it to buy the next one. So hope this video helps. Thanks so much for watching. As usual, everything is not financial advice. I'm not a financial advisor. but it's purely from my experience. Any questions, contact the acquisitions team, either Sarah or Natalia, or myself, and we'll be in contact. Chat to you soon.